miners cannot produce Bitcoin as fast as this overwhelming demand.
Bitcoin available on exchanges continues to get bought up, now sinking to its lowest level in 6 years. This is one of the reasons that price continues to go up, because there's simply just not enough supply compared to demand. All while Bitcoin miners, which are the entities that do provide supply, they do sell Bitcoin after they mine it into existence. Miners aren't selling. They were selling all throughout 2024, even with the Bitcoin price going up. We now see sideways distribution equaling miner confidence, meaning they're not willing to sell at these prices. They'd rather hold. Why this matters is because this is how exchanges replenish their supply. And $12 billion firm Bitwise, Bradley Duke of Bitwise Asset Management, explains how this will affect price if supply shock continues.
Currently, we are seeing the on-exchange balances of Bitcoin being the lowest, I think, going back to 2018. So this is like going back for many, many years now. The balances for Bitcoin on exchange have never been this low. And what that signals is that there's a lack of sellers on the market. So people will move from cold storage to exchange when they're ready to sell their Bitcoin. And if the exchanges are showing low balances, that means that we have few sellers in the market, and that will come into play and become very interesting once there is a rise and the buyers come back into the market for Bitcoin. My prediction, and of course I don't have a crystal ball and I don't know, and this isn't investment advice, but my feeling is that when it does start to move back up again, it's going to jump because there simply aren't any sellers. And if people are bidding and trying to buy and there aren't sellers in the market, they're going to just keep offering higher and higher prices.
And you subscribe to Altcoin Daily for the full picture, so you have all the information and can make the best decision for you as an investor. And you know that price is not just affected by supply of something, price is equally affected by demand of something. So while we know supply is going down, I mean, that's a fact. This is all verifiable. What about demand? Spot Bitcoin ETF assets under management has gone up over the last year and a half. But can ETF institutional Bitcoin demand continue? Well, as explained by Coinbase's head of institutional strategy, the demand shock from ETFs hasn't even really been allowed to begin.
The one important thing to remember about these ETF inflows, not just the surge we've seen recently, but since the beginning, because it's been an absolutely phenomenally performing ETF. And this is a very important point that's overlooked. This is being done with the asset managers not allowing their salespeople, their financial advisors, to recommend it. So that's extraordinary. That's like a shoe salesman not being able to recommend Nike, right? So that's going to change at some point. And I'll sort of leave it to your viewers to determine what happens when that thundering herd of brokers can actually pick up the phone and recommend this ETF.
So at the end of last year, Morgan Stanley is an example of a firm that did get the green light for its 15,000 brokers to finally recommend Bitcoin ETFs for their clients. Understand this had been available. Spot Bitcoin ETFs were a thing for 8 months prior, and they were very successful. But it took 8 months for Morgan Stanley's people to finally be able just to present it to their clients. That was somewhere around like here. We know what happened after. Most brokers are still waiting on that green light, and then it'll take multiple months for them to just even bring it up and educate their clients.
The reason for the call today, John, is something just came across my desk, John. It is perhaps the best thing I've seen in the last 6 months.
All while supply becomes scarcer and scarcer. And even just take, for example, one entity, Michael Saylor's strategy. Breaking news. Michael Saylor's strategy just bought another 13,390 Bitcoin. They invested another $1.34 billion into Bitcoin. The average price of this purchase was just under $100,000 per BTC. That'll be bragging rights for Bitcoin buyers in just a few years. But again, why this matters to you, the pace at which Michael Saylor's strategy is buying Bitcoin now exceeds the rate at which miners are producing it. Meaning just one entity alone is buying up all the Bitcoin that miners globally get per day. One entity, Michael Saylor, is buying. This is an extremely bullish signal. This isn't just scarcity, it's structural supply shock in slow motion. Guys, make sure you subscribe to Altcoin Daily. We were literally sharing with you Bitcoin and crypto, the opportunity, like here. But even if you missed it, even if it took years and you tuned in, you subscribed in 2023, Altcoin Daily subscribers were ready for this.
Yeah, I think the price will go up, right? I mean, you basically have a supply shock to an asset. That supply shock cutting in half of the incoming daily supply, obviously, if the demand stays the same, not even increases, just stays the same, then you are going to have the price go up.
By the way, great networking opportunity if you want a job in crypto, a job in Bitcoin. The largest crypto conference in the United States is happening in just a few weeks. My brother and I will be there. Use code ALTCOINDAILY for 10% off your tickets. Link down below. And looking at what's happening with Solana. Solana DEX volume is at a 9-week high. Another signal of animal spirits returning. So what this means to you, we obviously know Bitcoin is in demand. But we also see, based on the on-chain fundamental metrics, Solana, which took a big dip after the meme coins kind of dried up, Solana fundamentals are on the rise. And looking at where the builders are, 40,000 new tokens a day on Solana. That's $4 billion in daily DEX volume, close to December levels. Is the meme coin casino coming back? And last thing I do want to highlight on Solana, before we get to Ondo, before we get to Ethereum, is Solana is not just for meme coins. It's not just for garbage. It's for garbage and quality. Solana powers everything. 24/7 internet capital markets.
It's an exciting time to be alive. We think, in 5 years from now, it'll be common for companies to just say, hey, we're going public on the internet.
Yeah.
And it's just powered on the back end by infrastructure like Solana that is purpose-built to be a capital markets infrastructure for the internet era.
Meaning this is the opportunity, a decentralized NASDAQ. And what's new with Ondo? Well, breaking news, Ondo has secured a new all-time high for total value locked. Seems like it was just yesterday that we broke $1 billion in TVL, and now we're holding steadily above 1.18 billion TVL, meaning clear demand for Ondo's products. It's nice to see the fundamentals trend up and to the right. Also big news for Chain GPT, which is Web3 AI infrastructure. The news today is this. Congrats to Chain GPT on expanding to Solana. Proud to be part of this next step as Chain GPT brings AI innovation to a new ecosystem. So that's a major market opportunity as all those Solana dApps and builders now have access to Chain GPT. We're thrilled to bring Chain GPT's AI infrastructure and applications to the Solana ecosystem, empowering Solana developers, users, and projects with next-gen AI tools built for Web3. They're partnered with Certic, Radium Protocol, Layer 0, and Stargate Finance to do this. And it's also worth mentioning, this just happened a few weeks ago, we just dropped the AI VM white paper, the Layer 1 blockchain built exclusively for AI. So not only are they expanding to Solana, they're already on Ethereum and other L1 blockchains. They're building their own L1 blockchain exclusively for AI, meaning scalable compute, tokenized data, verifiable agents, a decentralized AI economy from code to cloud. Very cool to see the innovation. Also breaking news, institutions want Ethereum. And BlackRock has just filed with the SEC for in-kind redemptions on its Ethereum ETF. What that means for you, what that means for Ethereum. For the uninitiated, in-kind redemptions represent a crucial feature for many institutions. Instead of redeeming ETF shares for cash, authorized participants would be able to directly exchange shares for the underlying asset, in this case ETH, meaning when BlackRock clients sell out of Ethereum ETF, they can redeem it straight for actual ETH. And why people like this is because this model could reduce transaction cost, minimize taxable events, and may even lead to greater operational flexibility, all of which are especially beneficial in the crypto market. So this has officially been filed. According to leading analyst, Bloomberg analyst Eric Balchunas and James Seifert, this will happen by the end of 2025. This is an ongoing story. Click subscribe for a daily update keeping you informed. And like always, see you tomorrow.